Hi, good afternoon. I'm Craig Finster, President and Chief Financial Officer of Versus Systems. It's a pleasure to be with you today. Thank you for joining us. I'm going to introduce my friend and colleague, Matthew Pierce, in just a moment, but first I'm going to give a quick disclaimer about our discussion this afternoon. This presentation contains forward-looking statements, including, but not limited to, statements regarding the plans, objectives, expectations, and intentions with respect to future operations. All statements other than statements of historical fact are statements that could be deemed forward-looking statements. Versus Systems, Inc., we, us, are, or the company may not actually achieve its plans or product development goals in a timely manner, if at all, or otherwise carry out the intentions or meet the expectations or projections disclosed in these forward-looking statements. These statements are based on management's current expectations and beliefs and are subject to a number of risks, uncertainties, and assumptions that could cause the actual results to differ materially from those described in the forward-looking statements, including, among others, general business and economic conditions, including risks related to the impact on our business of the COVID-19 pandemic or similar public health crisis, the need for and ability to obtain additional financing, the risk that the company's intellectual property may not be adequately protected, and the other factors described in the risk factors set forth in the company's filings with the Securities and Exchange Commission or the System for Electronic Document Analysis and Retrieval from time to time. The company undertakes no obligation to update the forward-looking statements contained herein or to reflect events or circumstances occurring after the date hereof, other than as may be required by applicable law. Now, with that, I'm pleased to introduce Matthew Pierce, the founder and chief executive officer of Versus Systems.
Thank you, Craig. I appreciate it. My name is Matthew Pierce. I'm the founder and CEO of Versus Systems. Welcome to our business update. Thank you for coming. We very much appreciate all of your support, and we look forward to talking to you a little bit today about Versus. The very first thing I want to lean into after, of course, the disclaimer set of slides is that we had a huge quarter. Honestly, we've had a huge 6 months. The business achievements that have been accomplished by this organization over the last 6 months have been tremendous. We got to the NASDAQ, we acquired a perfect partner, we have more products, we have more paying clients, we're in more geographies, on more devices, playing for bigger audiences than we have ever had before. And we have a better team with world-class expertise. The steps that we've taken in the last 6 months position us extremely, extremely well, not just for the remainder of 2021, but for 2022, 2023, and beyond. So that's kind of the headline, the punchline. Things are getting better, we're growing, we're in a good position with respect to our partners, our products, and our team. And if that's all you needed to hear, but then we're gonna layer on a whole bunch more. We're gonna continue chatting about sort of the specifics of that. So what's up next is that the $2 trillion industry is undergoing some massive changes. So we're going to talk about how we are going to impact that. So today we're going to talk about who we are. We're going to talk about what we do. We're going to talk about a scorecard since the NASDAQ. So we're going to look at what we said we were going to do since we went onto the NASDAQ in January. Then we're going to look a little bit at Q2 and the Excite acquisition more deeply, which is going to be primarily Craig talking about sort of what all we did and where we're going. And then we're going to talk about the bright future. So next up, what do we do, right? Versus is audience engagement and rewards. If you're thinking of the only things that we do, if you're to collapse it down, we make things more fun. And we believe that in making things more fun, whether it's apps or games or television or streaming or live events, if we can make things more fun, then we're going to do quite well. And the data suggests that the way that we do that is through fan engagement and rewards. The acquisition of Excite Interactive allowed us to capture, grow, acquire a huge team and a tremendous amount of expertise around fan engagement. Their fan engagement tools are now our fan engagement tools infused with the power of rewards, which is where a huge percentage of our IP portfolio lives. We connect with fans inside the content that we love. What does that mean? It means that we're doing first screen and second screen engagements while people are watching live events, while people are watching television, while people are interacting with social media, while people are interacting with games. They can contribute to those games. They can interact with those games. They can make choices that impact the quality and nature of the game itself. And they can win real world rewards by doing so. That's what we're doing. So the first thing that we do is we use first and second screen fan engagement. As you see here, we've done work with dozens and dozens of professional teams, large events, global soccer, NFL, NBA, NHL. A lot of that work has been growing over the last several months. And then we do choice-based rewards. And choice-based rewards are a powerful, powerful part of the narrative. They're what keep people coming back. People love winning stuff. So the idea that they can win stuff while they're playing is a huge motivator for continued play, increased number of sessions, longer session times, and overall, sort of benefit to the player. So how do we get paid while we're doing this? How do we get paid when we're doing trivia and games and polling and sentiment inside of a game? How do we get paid when we're working with teams and leagues and broadcasters? How do we get paid when we are offering rewards? We're going to talk about the Versus business model. There's really three ways that we get paid. First, professional services. Professional services have historically been the bedrock of Versus systems. This is anytime we're doing something bespoke. This is anytime we're developing software for individual teams. This is anytime we're developing software for partners like HP, where we have a multi-year deal with HP to grow interactivity, grow engagement, grow rewards inside their Omen and Pavilion systems. This is also professional services related to live events. A huge percentage of the team at Excite Interactive, their expertise historically was to bring fans closer to the game, to bring fan engagement to the people that were sitting in the stands, sitting in the stadium. Excite Interactive was a world-class, like the world-class company that you went to for in-stadium, in-game engagements. They've worked on Olympics and the Stanley Cup, and they've worked on UFC and FIFA, and international soccer has been getting fans excited, feeling like you're part of the home team. Those are things that our team has historically done. And now they're bringing that same quality fan experience, the same ability to get fans excited. They're now bringing that online so that the at-home experience can be as exciting as the in-stadium experience. So professional services, that's the cornerstone of the company historically. Next up, though, is the fastest growing part of the company, which is licensing and SaaS. So the software as a service side, the idea that we can now package all these software elements together and license or do software as a service through the Zio platform or through our SDKs, the idea that people can get access to our rewards platform, the idea that people can get access to our fan engagement platform, whether that's games or trivia or social elements, teams pay for that. And events pay for that. Large, big events pay for that. Companies that we're working with, brands that we're working with, teams that we're working with, whether it's an NFL team or it's, the Stanley Cup champions or the Super Bowl champions or the college football programs that we work with, or the Peach Bowl, which we recently announced, or the Mexican national soccer team. All of these teams and leagues and events use our platform. And then inside that platform, they're able to add in games, they're able to add in social elements, they're able to add in polling and trivia and things like that. And they pay for that as a SaaS product. Finally, and this is where we think this goes from being a several $100 million idea, a several $100 million project, to being a multi-billion-dollar project. And that is unlocking the advertising revenue. The thing that Excite historically did not have, and the thing that we add to Excite, which Craig's going to talk more about, is the idea of rewarded advertising, the idea of choice-based ads, which is to say that when a player or when a fan is playing trivia alongside a live event, whether they are doing polling or sentiment about this particular TV show or this video game, or they're trying to score a certain number of points inside of a mobile app or inside of a game, they're doing so in order to win real world prizes. This is where the IP that we have really shines. The idea of dynamic regulatory compliance, the idea that we can manage state by state, country by country, province by province, local, federal, state laws to be able to manage prizing, to be able to manage eligibility, to be able to make sure that fans can be rewarded with real rewards for their actions inside of a game or inside of a show or inside of a stream. The idea that they can unlock coupons and prizing and codes that allow them to, do e-commerce more effectively. This is a space that we think is the multi-billion-dollar idea. This is where that lives. And The advertising inside of Zio has been available for about a week. We turned it on in favor of the Peach Bowl. They have a kickoff game. We're working with the Peach Bowl for the remainder of the year, and the New Year's Six Bowl that is going to, eventually the Peach Bowl will also host the national championship for college football. And right now, you can play right now for Peach Bowl fan rewards today. And that's available for, in advance of the college football season. It is in advance of the Peach Bowl itself, which happens later in the fall. It's going to be integrated into NFL, college football, cricket, rodeos, and all kinds of stuff. This is what is going to unlock the massive opportunity. And this is why we got excited, really. The idea of the licensing revenues is massive. The idea of the professional services is massive, but the real key to the whole thing is being able to unlock the advertising revenues. Why does it work? Well, it works because it brings value to brands, creators, and consumers. This isn't just something that works for brands. This isn't something that just works for content partners. Historically, the advertising universe that has propped up the $2 billion entertainment industry, the media and entertainment industry, which for a very, 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 very long time has been financed through advertising, is having to find some new models. And the reason that it's having to find new models is because people's consumption patterns are changing. People are buying tickets differently than they used to buy tickets. People are watching differently than they used to watch. They're watching in smaller, more mobile, more personal, sort of always on, anytime, highlight driven. They're consuming their content differently than they've ever consumed their content. Versus accounts for that. Versus allows for content to be personal. Versus allows for live events to be mobile. Versus allows for the fan experience to be engaging and fun, even when you're not in the stadium. It works in the stadium. It works when you're tailgating. It works when you're at the concert, and it works when you're at the house. And that's really the transformative element here. And it does so by benefiting all three major parties involved. So for brands get higher engagement, better recall, better brand affinity, and higher transactions. The reason that they get that is because you remember the prizes that you've won. You specifically remember the prizes that you've chosen. So when you're going into an experience, when you're going into a live event, when you're going into a stream, when you're going into a game, and the game offers you a chance to win a particular prize, the likelihood that you're going to remember that prize, the likelihood that you're going to value that prize once you've earned it is orders of magnitude higher than it would be if you had just gotten a banner ad or an interstitial or a video. Rewards change how people look at the prize itself. And that benefits brands because it changes it from being something that I'm forced to do to something that I have chosen to do, that I want to engage with, and that I want to earn. I value the things that I have earned. And as a result of that, you see much, much higher brand affinity, much higher brand recall, and much higher transaction rates when using rewarded ads than you do through traditional ad units. So brands win. Content creators win too, because people play longer, people watch more, which makes sense. You're 77% more likely to watch television live when you can win prizes associated with TV. It's one of the reasons why you now see, when you're watching sports, you see fantasy crawls underneath football games. Like, the idea is that you wouldn't necessarily watch a particular football game except that one of the people on one of the teams is on your fantasy roster. The idea that you can win money or bragging rights or stuff as associated benefits that come from that game encourage you to watch that game and encourage you to do so live. This takes that idea writ large. Now it can work on streams. Now it can work in video games. Now it can work in apps, and it can work in football too. This is something that is going to be a free-to-play element that allows people to win real-world awards, which encourages people to watch. And when you're encouraging people to watch, you're encouraging people to tune in, you're encouraging people to tune in live, that benefits content creators. And content creator here is writ pretty large, not just broadcasters, but also OTT, also streamers. So everyone from Twitch and TikTok to NBC, ABC, ESPN, and Fox. Finally, the audiences and the players win, which makes sense. The audiences and the players are winning, they're earning, they're interacting, they're engaging, and in so doing, they're participating in the content, they're participating in the entertainment, and they have more of a stake in it. They have more of a say in it. They have more wrapped up in it. And as a result, they enjoy the experience more. 97% of the people that have been interviewed after winning prizes talk about how much more fun it is to win, right? We talk about making things more fun. This is who we're making it more fun for. If it's more fun for the audiences, they're going to watch more, they're going to watch longer. It's really benefits all around. So let's talk about the scorecard. When we're talking about what's happened year to date, what we wanted to do is go back and look at what we said was going to happen when we moved up to the NASDAQ. So for many of us on this call, we spoke right before we leveled up to the NASDAQ. Many of you invest in the company as we leveled up to the NASDAQ. We talked about some of the stuff that we were going to do. So let's use that as the scorecard. So one of the things we talked about was acquiring something valuable at a good price. We talked about growing the product offerings. We talked about adding more paying clients. We talked about getting more verses in more places. And by that, we meant geographies, verticals, devices. It was important for us to grow the company, to grow the presence of the company, and then to add key team members, people that we thought could add a lot of value as we move into new verticals, as we move into new spaces, and then grow the revenues. And I would make the argument that we've actually done all of those. So let's go into those a little bit deeper. First, acquire something valuable at a good price. We acquired Excite Interactive in June, so quite recently, which is why we're issuing both the quarterly financials and also the business acquisition report, so that you guys can see what all has happened over the course of the year, even as we're building this up for Q3, Q4, and beyond. This was a very important acquisition for us. It's basically been hand in glove. We're really excited about the team, and it's 100% accretive. Like, we've gotten an opportunity to work with people who understand the space very well, who are growing partners, adding hundreds of partners, adding huge experience in live events, and adding 8,000 sporting and live events worldwide. So let's take a look at them. These are some of the many teams and projects and companies that we've worked with. You see in there, of course, multiple NHL, NFL, the Peach Bowl, FIFA, a bunch of other projects that we've been working on. And really the story here is, where were we a quarter ago? A quarter ago, we had one partner, right? It was a world-class partner. We had HP. HP has been the horsepower that led us to where we are. And we went from one world-class partner to 47 world-class partners in one quarter. And this was through the acquisition of Excite. We were able to gain a huge number of, these are paying clients that pay us to do professional services, SaaS, and advertising. Pretty transformative shift for us. We got a deep expertise in live events, in sports and games and broadcast. These are teams that have been at Stanley Cup champions and world champions in basketball and baseball and football. These are people that have run live events and fan engagement at the Olympics. These are Emmy Award winners and Webby Award winners, and just a huge roster of people that have deep expertise in fan engagement. We're really excited to have them on board. And really what it does on the technical side is it gives us a perfect platform to grow both the SaaS element that we've been talking about and also the advertising revenues, because the tools that Excite had for fan engagement, for second screen and first screen, now can have additional sort of revenue elements attached to those, including advertising, and we can now sell it as a package that teams and leagues and broadcasters can use. So we're able to grow professional services, SaaS, and also advertising with this introduction. So let's take a look at the products, because that was next on the scoreboard. So the new products, bear in mind, again, a quarter ago, we had one product. We put out an SDK for HP that runs runs rewards through through their Omen and Pavilion laptop and desktop lines. And now we have Zio that's being used by 47 teams. We have SDKs that are being used by multiple gaming partners. We just rolled out a beta for the Shopify app. We have rewards, and we're adding first screen functionality. So these are all things that are available right now today that are products that we did not have 3 months ago. So Alex and Sean and the team that has been building out all of our tech has been extremely busy doing great work. The SDK is still an important part of what we do, and we're rolling that out to more gaming partners even as we speak. The Shopify app, which is new, the Shopify app is kind of a cool, it's in beta now. And what the Shopify app is going to allow us to do is access the millions of Shopify shops that use Shopify for e-commerce. They're now going to be able to put discounts and coupons of their products into Versus-enabled events, into Versus-enabled games, into Versus-enabled television, into Versus-enabled streaming. And the idea there eventually is that any Shopify shop, small businesses, large businesses, everyone from Adidas to apparel shops to the corner sub shop to everyone that is an entrepreneur will be able to access world-class content through this application, through Versus into games and television and streams that they never would have been able to access otherwise. This is a transformative e-commerce element that is now in beta, and that we're working with Shopify shops to grow the feature set to be optimized for what Shopify entrepreneurs need, what Shopify entrepreneurs want. And this is going to be a really big part of what we're doing going forward. We were really excited to get that onto the store in beta form, and then we're going to be improving that over the course of the next period. Next up is rewards, which we of course already sort of considered to be the linchpin of the IP portfolio, and really the linchpin of the relationship that we have with HP and the relationship that we have with other partners. The idea that brands can place their rewards inside of content and people can win that content. In this case, answer these 5 trivia questions and get some Oreos, right? Win some Oreos for knowing trivia about the Olympics. They were, an Olympic sponsor. The Olympic sponsor then becomes a mechanic by which you can watch the Olympics and win real world stuff. Finally, there's the idea of first screen functionality. First screen functionality, the important part here is being able to move it not just from your phone, but being able to move it from your phone onto the first screen. That's going to happen through interacting with the Chiron. It's going to happen so that the first screen can react to polling, and then the first screen can react to sentiment. You'll be able to see your work, the work that you're doing on your phone, on the big screen, on the TV. We have this functionality now. We've got a number of partners that we're working with, and we will be rolling out over the course of the second half of this year, being able to place interactivity into the first screen. What that really does is it increases your transaction rate, it increases your adoption rate, it lowers the customer acquisition cost. The idea that when I'm watching TV, if the TV tells me to go to this website or go to this app and play this game and win real stuff, the adoption rates go up by orders of magnitude when the first screen that you're interacting with is linked directly to the second screen. We think that that's a really important part of going forward. We're also looking at adding additional social compatibility through the social media partners of the world. Next up, so partners and verticals now enabled. To go back to the scoreboard, what have we added? Well, we've added a lot. We've added many live events, everything from NFL to NBA to NHL, Major League Soccer, cricket, rodeo, all sorts of things. The idea of large events where we are controlling or we are engaged with the big screen in the middle of the stadium, or the screens that are outside the event, or the way that you engage with it at home while you're watching. Of course, this has been transformative in the pandemic when we're starting to talk about live events that couldn't happen, live events that were canceled, live events that were stricken. Like the live events universe, this is frankly why we're able to capture Excite, why we're able to acquire Excite for such a low price, was because last year was really rough on the live events universe. And now you're seeing that come back. 2022, 2023 is going to be a massive year for live events. There's huge pent-up demand. We're very excited to be a part of live events coming back, but we're also excited to bring that same excitement home and growing the audience for the live events. We also added streaming functionality so that it can be played on Twitch. For those of you that saw our last investor update, we had it Zio enabled, and you were able to play games during the event and win real world prizes. We're adding that to streaming more broadly going forward. We continue to have a strong base in games, both mobile and laptop and desktop, and eventually into console. The idea of the multi-billion-dollar gaming universe being a core part of where we came from, core part of our DNA. And then looking forward, we're looking at OTT and broadcast TV, not just for live events like sports, but for reality shows, award shows, and even scripted television. We're looking at a couple of different partners that might be really, really nice fits there. And then finally, social, the billions of people that interact on Twitter and Facebook and Snap and others. These are all verticals that we can now engage with in a way that we couldn't 3 months ago. Another thing that we have now that we didn't 3 months ago is more geographies. We're now available in China, the US, Canada, Mexico, India, and the UK. We added Mexico, India, and the UK in the last quarter with our partner HP, growing this into a real global phenomenon. The idea that you can win rewards inside of your favorite events, wherever you are in the globe, is definitely where we're going. And it starts with some of the largest media consuming countries on the earth. And it's not just that we're growing into these geographies, it's that we're adopting and using, and we're able to interact with content from those geographies. So it's not just prizing that's available there, it's relevant content. So when we talk about globally relevant content, when you talk about boxing in Mexico, you're talking about Canelo Alvarez. And when you're talking about sports in the UK, you're talking about rugby, you're talking about cricket, you're talking about the 100, you're talking about these kinds of things. And we're now integrating into those partners as well. So finally, we're going to look at growing the team and adding world-class expertise. We have a championship ring here, which is meant to symbolize the fact that for us, we've been fortunate enough to bring people on the team that have been such a part of the hometown experience, such a part of the fan engagement experience for their various teams, that they've actually won multiple titles, multiple rings themselves, which is kind of fun to see, the big, gigantic championship rings. Matt Coy, who's done multiple Olympics, Ryan Bushy, who just got back from doing his second straight Stanley Cup championship with the Tampa Bay Lightning, and multiple Emmy Award winner Sean Hopkins, who is the founder and former CEO of Excite Interactive, and now is the Chief Innovation Officer at Versus, helping to bring fan engagement elements to the team. We also added Jen Prince. Jen is the Global Head of Business Development for Twitter. Jen joined the board a couple of months ago and is an absolutely invaluable strategic resource. Jen has probably sold more media ads to media and entertainment companies, from her time at YouTube and Google to now being the global head of Twitter. She's probably sold more ads to media companies than maybe anybody on the face of the earth. And having her voice in the room, having her join the board, is not just a tremendous validation for the company, but is a tremendous strategic resource for us going forward. So to look at the scorecard, we acquired something valuable at a good price. We grew the product offerings. We added more paying clients, a lot more paying clients, actually. We're in more Versus in more places. We're adding key team members, and we've grown the revenues. With that, I will hand you to our very capable Chief Financial Officer, Mr. Craig Finster, who can talk a little bit about Q2, and then we're going to talk about where we're going in the future. Craig?
Let's talk a little bit about the financial and economic impact of the Excite acquisition and the other changes we had over the last quarter. So, as Matthew indicated, let's kind of start by looking at what we acquired. We acquired customers, we acquired contracts, we acquired some software products, and the team that built and operates these things. To really understand the value of those, we need to look at where Versus was as a business before. Regarding customers, prior to the acquisition, we had a handful of customers, a single one of which, HP, accounted for over 99% of our revenues. Now, over the past 2 years, we've had 150 plus customers, which is instant diversification of our revenues. This is the ability to scale our user base and its marquee partners, and it's a strong foundation to build from. On the products front, Versus has a great advertising technology platform. We've always known that. We've seen it validated in our HP partnership and their continued use and adoption of that product. We bought Zio, which is a phenomenal product, and a whole new suite of games and software tools that have been validated by fans all over the world. Now we're combining that with our ad tech platform, with our fan engagement tools, and that's starting to open up these kind of critical new markets, these new product offerings that we're looking at. In the team that built these things, we did, that's an important piece. Also, sports is a very relationship-driven business. It's a lot like gaming. We have deep relationships in both verticals now, and this would have been otherwise very hard for us to build. It would have taken a long time and a lot of effort to do it. Now we have that expertise and authenticity in developing the tools that increase engagement, and we've seen it play out in Venue. As Matthew indicated also, the real thing we got beyond these existing relationships, products, and people is the ability to combine these things to create transformative offerings for key markets, such as First Screen, that can radically increase our user base and audience size. That's the thing that powers our advertising business. This is because our advertising platform combines perfectly with the Zeno engagement platform. It's really very much hand in glove. Connecting players with brands through a highly engaging ad unit has been the core of Versus. It's a fundamental part of our business. Now we're adding audience scale through Zeo and other new product offerings. And this is the part where we expect to capture the most value from making entertainment more fun. Overall, there are three key strategies we're pursuing to go after this opportunity. One is protect and grow our base business. This ability to create player and fan engagement serves as the foundation for our offering. Our deep expertise in producing shows and events enables us to create tools that effectively help others do the same thing. As the economy emerges from the COVID-19 pandemic, we're seeing more live events occurring. We're seeing repeat revenues year over year, and we're seeing previous accounts come back. Over the third and fourth quarter of this year, we're looking for growth in the accounts from the NFL, the NBA, and the NHL, among others. We've had over 47 active accounts in the first half of 2021. That's through June 30th. That number's grown since then. And we're focused on increasing both the number of accounts and the average revenue per account. We expect minimal changes in the cost structure as this goes. This really is a fairly fixed cost structure. Two, expanding our SaaS and licensing business. More games, more events, more apps. This includes our gaming SDKs, our Zeo platform, and the other games and tools we've created like Filter Fan Cam, Skee Ball, and our predictive gaming platform. This is an important source of our future revenue growth. Like most software-based businesses, we believe this is highly scalable and has a high operating leverage. We're working on the bundling of our offerings and looking for ways to increase the sell-through rates. We picked up this business in June, so there's still some combination that we're working on. The third core strategy is develop new combined products and enter new markets, all of which power all of our revenue lines: professional services, software licensing, and advertising. This is the giant win opportunity. This is the First Screen product in particular that we're excited about, and expect to see more news about this and launches throughout the rest of the year. Executing along these three dimensions helps us really realize this market opportunity. This is the core of what we're doing. Our engagement makes our SaaS products better. Our SaaS growth is high margin and helps build audience size for our advertising business. And we're looking to continue to drive scale into our platform via current and new markets.
Thank you, Craig. Appreciate it. So now we're going to talk about the future. And I'll be honest, it feels really nice to be able to say, here was the scorecard for what we wanted to do over the 6 months after we joined the NASDAQ, and to have every single one of those hit. It felt great to be able to say, we said we were going to be acquisitive, we acquired. We said we were going to have more products, we have more products. We said we were going to have more paying clients, we have more paying clients. We said we were going to grow geographies, we grew geographies. We said we were going to go get more great team members, and we got Emmy Award winners and championship, caliber players, and we added Jen Prince to the board. Like, this was a massive set of wins, and I want this to be about that. This was a huge, huge quarter for us in that respect. And now I'd like to look at how you're going to grade us the next time we see you, how you're going to look at us the next quarter and the quarter after that. What do we have to do? What are we trying to do on a daily basis to power the next generation of disruption for a $2 trillion entertainment industry that is absolutely ripe for disruption? So this is what we're talking about every day. We're talking about growing our foundation. We're talking about increasing the number of live events. The nice thing here is that we have a huge rising tide, right? To be fair, you can't get much worse in the live events universe than you've had for the last 18 months. So of course it's growing, but we're growing with it. We're an industry leader in this space. We've got, as Craig said, we've worked with 150 teams over the last 2 years. You're seeing those teams come back. You're seeing new teams added. You're seeing new partners grow. We didn't have the bowl games, and now we've got the Military Bowl and the Peach Bowl. We didn't have certain college football teams. Now we have college football teams. We didn't have some of the partners that we now have, but the people that run these teams, the people that run the leagues, realize that they have to reach the fans at home in new ways. They realize that in stadium and at home have to work together. This is an important transformational moment for people to be able to engage with their fans in a more robust way, and being able to do it with individualized, personalized engagement, being able to do it with personalized rewards, and do it in such a way that when fans win, they remember the team and they remember the brands and they remember the experience in a positive way. That's what we're unlocking here. So we're going to grow the foundation. We're going to continue to grow live events. We're going to continue to grow games. That's what is one of the things you're going to measure. So, at the end of Q2, it was 47 teams. Is it more than 47 teams at the end of Q3? Is it more than that at the end of Q4? The answer to that is going to be yes. So we're also going to add more partners that are using SaaS and licensed products. So it's, as we talked about, the three ways that we get paid, the three business models that we have. Professional services is one, licensing is two, that's the fastest growing part, and then the advertising revenue, which is going to be the fastest growing part going forward and going to be the largest area of opportunity for us going forward, is with the rewards. Growing the SaaS users, growing the licensed users. The real trick to here is going to be both selling into the partners that we already have that are existing, and also adding new verticals, like being able to move it over into social, being able to move it over into streaming, being able to move it into Twitch and YouTube and social media. We've got a couple of huge partners in the pipeline that could really change a lot of our fortunes going forward, even if we just land one or two of them. Pretty transformative elements here for licensed products. Adding first screen engagements. First screen is really going to be key for us keeping our customer acquisition cost where we want to keep our customer acquisition cost. Being able to have people that are in the game, people that are in the stadium, or people that are on the screen when you're watching it on ESPN, or you're watching it on Discovery Channel or the Pac-12 network, or however it is that you're consuming your content. Having someone on Twitch or having someone in the broadcast say, go here, do this, or showing the QR code on the screen, or say, having something run across the Chiron that talks about where to go to engage with this stuff, whether it's at a prize fight like we did for the Canelo Alvarez fight, or it's a football game, or it's a rodeo, or it's anything that's being televised, whether it's an individual streaming their own games, right? The idea that someone at home is streaming their own content that they created themselves, whether that's on TikTok, or it's on Twitter, or it's on YouTube, or it's on Twitch. The idea that any broadcaster can include versus elements inside their broadcast and grow engagement, grow interactivity, grow personalization, grow rewards, that's going to be really powerful for us. So increasing the number of times that we're shown on first screen, or that we're mentioned on first screen, because right now it's none, right? So being able to go into first screen, being able to grow that is going to be a really important part of the go forward for us. We continue more versus in more places, increasing the idea of geographies, increasing the idea of verticals. That's going to be one of the ways that we continue to be measured. To the extent that advertising is ultimately a transactional business, whether it's cost per click or cost per acquisition, cost per engagement, this type of thing, having versus enabled products in more places and having it be in front of more audiences is going to be a central part of the strategy. So more versus in more places drives the advertising revenue. And then we're going to be adding social integration. So can this work inside of other platforms that have millions, and in some cases billions of players and users and adherents? That's going to be an important part of what we're doing for the rest of the year, is can we integrate into partners that have reach, real reach, billion player reach, billion audience reach, and then grow the revenues. And you're already seeing it go from where it was in Q1 to Q2 to just stacking on top of that. Very, very exciting opportunities. So this is going to be how we're going to be measuring Q3 and Q4. This is the story. Can we get it in more places? Can we put the three business models onto footing that each one of them is growing independently and feeding off of each other? Can we put it in front of larger audiences? Can we put it in front of more fans? Can we make the experiences more fun? That's going to be how you measure us in Q3 and in Q4. We're going to bring this exact same slide back then, and we're going to talk about how we did in Q3 and Q4. And I'm very pleased to say that the trajectory is very good. We're very excited about being able to knock all of these things off the list in the next 6 months. So the ultimate story is that this is a $2 trillion industry, right? You start talking about media and entertainment. PricewaterhouseCoopers did its media and entertainment roundup for 2021 to 2025. You have a $2 trillion industry, much of which has been massively disrupted in the last year. Whether it's from a massive increase in games, or a massive drop in the box office, a massive, devastation of live events, or the growth of social watching, the growth of streaming online, that we now have over 1.1 billion streams that are 1.1 billion subscriptions to OTT services, that many of which didn't even exist, 10 years ago, and many of which didn't even exist 2 years ago, right? Like this is a transformative time for a $2 trillion industry, and Versus is going to be a part of that. Versus is a part of that. We're a part of the live event scene. We're a part of the game scene. We're a part of interactivity, and we're becoming part of broadcast. We're becoming part of streaming. The idea that it has to be more personal, the idea that it has to be more engaging, more interactive, and more rewarding, that's at the center of the story for Versus. We make things more fun. We are fan engagement. We are rewards. That is how you're going to get the most out of your viewing experience. That's how you're going to get the most out of your gaming experience. That's how you're going to get the most out of your media and entertainment experience, is by doing it with Versus. So welcome to Versus Systems. Thank you for listening. We appreciate you guys taking the time. And now we're going to take a couple of questions that we got in from, Sophie sent me a couple of these. All right. Oh, Scott Buck. Cool. Scott asked about the business pipeline versus a quarter ago, which is pretty close to infinite, frankly. I mean, we went from, as Craig rightly pointed out, we had one partner that really represented, didn't just theoretically represented 99% of our revenues, right? The partner that we had, HP, is a great partner, but the diversification of revenues was absolutely required. It was one of the things that we knew we had to solve this year. It was one of the things we knew we had to do once we got to the NASDAQ. It's one of the reasons we raised money. It's one of the reasons we moved to the NASDAQ, was, grow the product suite, grow the number of partners, not just so that we could grow the revenues, but just so that we could decrease the risk. The concentration risk for this organization was much higher, and the idea that we had tremendous volatility historically, that's no longer true, right? We would have, quarters like Q1. We aren't going to have quarters like that anymore, right? Those quarters go away because now we have, for example, in the last quarter, we went from one partner to 47 partners that pay us. And we've worked with 150 over the last 2 years, and you're seeing those start to grow. You're seeing those start to come back. So the pipeline, the business pipeline versus a quarter ago can't be compared. We are on much more sound footing than we were 1 quarter ago. I wish I could see you so that you could nod up and down. But the next question is, how much education do brands and advertisers need in helping to recognize the value of this type of advertising? I think that they're seeing it, right? Like, we've been able to show the returns, the return on ad spend, the increased transaction rates. This isn't an incremental, we're not talking about being 5% better or 10% better. You're starting to watch, for 40% longer, right? You're starting to watch live, 77% more likely to watch live. You're starting to see engagements. When we did the Canelo Alvarez fight, during the fight, we did that with Dr. Pepper Crush for Canelo Alvarez in the most recent Canelo fought for the middleweight title against Billy Joe Saunders in Texas Stadium, in the big Cowboys Stadium in Dallas. And people played games during the fight for an average of 21 minutes during the fight. During the Pittsburgh Penguins games, we just brought on the person that ran Versus and Zio for the Pittsburgh Penguins, now works at Versus. They were seeing, they left because they see the transformative power of what we're doing. They ran that program to the tune of having average audience engagement of over 40 minutes per game. They were creating 2 million incremental ad impressions per game for regular season games. And so when you start to have these kinds of numbers, these eye-popping kind of numbers, transaction rates that are measured in whole percents, transaction rates that are sometimes measured in the 30 and 40 and 50% kind of range, that's astonishing. And so it's taken some education. It's definitely taken some time and energy to show people how much better this is. But once they get it, we've been able to get more people on board. And so it helps the brands, it helps the content partners, and you're starting to see that education process kind of pay off in the pipeline. So we're going to continue to put energy and effort into educating brands and agencies. We're going to continue to put energy and effort into educating content partners of various kinds, not just games and live events, but social partners and media partners and broadcast. That's an important part of what we do is teaching people. So a lot of what we're doing is still very much outbound, but we're starting to see inbound work happening. And you're starting to see it in interesting groups, right? Like being able to get a bowl game, one bowl game begets another bowl game, that bowl game begets another. I went and recently spoke at the bowl conference in Scottsdale a couple of weeks back. And it was great. It was great to see people that have put billions of dollars into sports. And it was also great to see how many people that they've, that group has educated with scholarships over the years, second only to the GI Bill. An absolutely phenomenal institution for creating opportunities for education that cares so much about both the student athlete and also entertainment at the same time. They're looking for new things. They're looking for new ways to engage with fans. And I found the reception to be quite good. And you're starting to see, success begets success. So adding to that mix has been really, really nice as well. And then another question about the competitive landscape. The competitive environment is an interesting one. I think that we have the most coherent offering on the market across a broad swath of entertainment types. The idea that we can do both Twitch and also broadcast television, the idea that we can do video games and also apps and also TV, and also doesn't represent fractured effort or energy, because all of the underlying technologies are the same. All of the underlying mechanics are the same for creating rewards. A win condition is a win condition is a win condition, whether you're scoring points in a video game or the Tampa Bay Bucks beat the Tennessee Titans, or the Tampa Bay Lightning win the Stanley Cup, whether you're doing predictive elements, guessing who's going to win or who's going to have more rushing yards, whether you're guessing who's going to have win the final rose in The Bachelor. All of those win conditions are the same as far as our system goes. Like, we set up a win condition, the win condition creates a reward. If you achieve the win condition, then you get the reward. That undergirds every single thing that we're doing. So it's the same technology. It's rewards, it's interactivity, and it's betting on people's real behavior, right? How people really act. People love choice, people love interactivity, people love winning stuff. The reason that this is the best project I've worked on in my career, apart from how fantastic the team is how true it is, right? People love to win. People love to choose. People love to engage. And it changes how they think about prizes. It changes how they think about content when they have an opportunity to win things. And we have an extremely coherent product suite and an extremely coherent narrative around earned rewards and choice that works across multiple forms of media. And when you talk about competitive sets, there are other people that are doing some stuff in live events. There are other people that are doing some stuff in Twitch. There are other people that have Twitch extensions. There's not really anybody doing it in TV. There's not as much of this being done in social. And you start talking about, a $2 trillion industry. There's whole swaths of it that aren't being touched that we're going after. And then the places where they are being touched, it's sort of piecemeal. And I feel really, really good about, especially now that we've acquired Excite, what our product suite looks like, what our partner set looks like, the barriers to entry that come from the relationships that we have. I feel really, really good about the IP portfolio as a barrier to entry. I feel really, really good about the relationships as a barrier to entry is kind of new and exciting for us. The idea that we actually know these people personally and have worked with them for years and years and years, that's a pretty tremendous and pretty powerful. And in fact, several of them that now work at Versus used to be the people that ran Versus at the various teams that they used to be at. So that's kind of fun to see that grow as well. So I feel pretty good compared to the competition that's out there. Am I being flagged? I could sit here and answer questions about Versus all day long, but those are the ones that I have in front of me, and I've got, I'm sure, dozens and dozens more. I will assure you that I will speak to nearly all of you, because I get to talk to you as much as as much as anyone could. We're eager to come talk to investors. We're out talking to big, gigantic partners on a regular basis. Had multiple meetings in the last couple of weeks that have some things in the pipe that we're really, really excited about. And we're going to be really excited to share with you guys in the next quarterly update, whether that's in Q3 and in Q4. There's a whole lot going on. So on behalf of my esteemed and snappily dressed partner, Mr. Craig Finster, the president and CFO of the company, and all of the people that work here at Versus Systems, thank you for joining. Thank you for being shareholders. Thank you for being on the team. We appreciate all that you do. Stay tuned. Good things are coming soon.